won't lie, bro. I won't lie. Today was a pretty hard day in the market. Kind of indecisive on where, well, not indecisive. Like the draws on liquidity, if you guys traded today, futures were pretty decently easy to expect on what price wanted to go on on where price wanted to go. But in terms of entries, if you guys enter on the lower time frame, in terms of entries, we didn't really find too much of them because we were accumulating a bunch. There was a lot of wick offs. Just a lot of accumulation and just consolidation today. But price just fought to the draws. And so that's kind of, I feel like, what made today hard. Regardless of that, we were able to come out positive, a winning day, two trades. The bad thing is that none of the true trades I took, we took full profit. Both of them were partials, and then one of them was break even after partials. The other was partials and then trailing stop loss. But I should have been up. I should have still been in that second trade. We're gonna recap it. It was I put my stop loss as a pretty dumb spot. But we can get into the trade. So coming in first, daily bias. Mondays usually are the more harder days for me because it's kind of deciding where price wants to go. But I was leaning coming into the market. I wanted to see price deliver lower, right? The reason why is because we were in a daily for value gap on Friday to finish off the day, and I want to see price after it took out the higher time frame drawn liquidity here. I want to see price kind of retrace a little bit more this week and take out more of the internal sell side liquidity before, even if we want to head up before heading up, take out some more of the sell side. And then overnight, price was also kind of forming this market maker sell model on the 15-minute here, in addition and additionally into the 1 hour here. So we have the accumulation zone here, consolidation zone, accumulation 1, accumulation 2, and this would be a smart money reversal on the 1 hour. And I want to see kind of price deliver lower, and ideally this week early to hit our previous day low on Friday and fill in this daily fair value gap. But so that's kind of why I was expecting today to be a bearish day, right? But the problem is, coming into the day, we were on the 4 hour. We were respecting this 4 hour fair value gap. So when we respect bullish PD arrays overnight, that's a pretty good sign that we're going to react off respecting the bullish PD array come New York session. So because of that, I was iffy on like committing 100% to being bearish. And additionally to that, we had already taken out Asia lows during London session. And so even if price wanted to head lower, I feel like because we were respecting this 4 hour fair value gap, and also because we put in this SMT, I think it was, we put in a bullish SMT. I'm pretty sure it was a 15-minute bullish SMT here. We had a 15-minute bullish SMT right before market opens. I expected, even if we wanted to deliver lower, right? Even if we were to deliver lower on the higher time frame and finish out that market maker sell model I just showed y'all, even if we were to do that, I still want to see us take out buy side liquidity because we've engineered so much liquidity during pre-market. We have London highs that weren't taken out yet. We have Asia highs that weren't taken out yet, and then we also have our new week opening gap. We have this right when market opened on Sunday last night. We have a 15-minute fair value gap right below that new week's opening gap. And so we have a lot of liquidity to the upside, especially because we were just dumping the entire night. And because of that, I want to see some sort of buy side liquidity get taken out. So today I expected us to take out buy side liquidity, and then tomorrow or Wednesday, if we're able to kind of invalidate this 4 hour fair value gap, for us to deliver lower. But if we don't if this 4 hour fair value gap ends up holding, then the rest of the week I'm going to expect us to deliver up higher into the next PD array that we can find. But for now, today, just focus on today, I switched my bias to bullish after further analysis, like right before pre-market. And so, yeah, so coming to the market, I was bullish. And our last kind of confirmation that you should have saw as to why price was going to be bullish today was we put in a 15-minute SMT right at a market open. NQ didn't end up taking this 15-minute low. ES does. So we have a 15-minute bullish SMT. In addition to that, we get what? A 15-minute inverse fair value gap. And that's what right before or right when macro time frame opens, right? 9:45, right when macro opens, we end up inversing that 15-minute fair value gap. That's another good sign that today we're going to be bullish. And so now, after we inverse that 15-minute fair value gap, I'm looking for London highs and Asia highs to get taken. And so my first point of entry, the first stop or the first point where I start looking for entry, right when macro starts, is, so we have a low here. Sorry, this is actually in the way. We have a low here at 9:45, a high here at 9:49, a lower low at 9:51, and then we deliver up higher. And so essentially we get a bullish unicorn model, right? And so what I wanted to see textbook wise was I wanted to see as soon as we broke price here, as soon as this created our fair value gap here, I wanted to see price retrace back 25 or to this low, so 30-point handle stop loss, and then for price to retrace, tap into that fair value gap, and then for me to take Asia highs. London would have been impartial. The only problem was we didn't end up getting a fill here, and as soon as news came out, we swept London highs, right? We swept London highs without getting an entry here. And so that's already, I'm now a little bit iffy about taking it, but we don't end up taking Asia highs. My bias is still bullish, and because of that, if we get a retracement soon, I'm going to still enter. But however, I do de-risk. I was gonna go initially in with 8 cons. I de-risked and I put in 4 cons for this, and then I also need more confirmation, right? Because like I said, we just took out minor buy side, which is that London high, and so because of that, I'm already a little bit less confident. So like I said, my original entry would have been here at that fair value gap. As soon as it gets taken out, 30-point stop, 30-point stop, and then target Asia high. So that would have been my original entry, but because we don't get, because we already swept out that buy side liquidity, now I'm looking for an extra confirmation to ensure that we're going to look for Asia highs. And so as soon as it taps back into that fair value gap, I'm waiting because, this is a pretty strong bearish candle closure. I'm waiting for this structure to get broken because I need to see more. And that's what it does, right? Volume candle breaks the structure, and as soon as this candle closes and this candle retraces back into this 1 minute order block, that's when I enter. And now, of course, we get some chop. We're getting some liquidity. We're taking some liquidity because we just took out buy side. We're going to look out to take out some sort of internal sell side. So that's what we're doing here. Good stop loss placement, 30 points. And then my first, take profit here. I take off 2 cons. Is at 20,089. And as soon as I take partial profits, I put my stop loss to break even, and then we get stomped out, which is fine, right? Like that trade, I feel like I managed pretty well. It was just a little bit choppy today, and then price ends up taking Asia highs later, right? And so now both of my draws are taken. Both my London highs and Asia highs are taken. And like I said, you guys remember, I told y'all my expectations was for London high and Asia high to get taken, and then if we wanted to deliver lower, because those are the 2 high points, high probability, liquidity points. Like they're pretty attractive, right? Asia highs, London highs, previous session highs and lows are pretty attractive. So as soon as we take those, I'm going to see if price wants to finally deliver lower and finish out, taking out some more internal source liquidity to finish out our market maker sell model. However, we also have to adapt and realize that the market doesn't care what we want. It's going to do what it wants. So now I'm looking for confirmation to see if we truly are going to deliver lower or not, right? And so as soon as it takes, Asia high, I'm looking for that to happen, and we're getting some pretty good movement down, right? So there's potential for us to, actually start our movement down. In that second macro, nothing really happened here. And then so start of the third macro, right? The start of the third macro here, we have a pretty promising, it looks pretty promising that price is going to finally start moving down. And we get a bearish unicorn model, right? So we have a high here, high, a lower low. That's pretty textbook. The only problem is we have a bullish SMT here, and I want to see this bullish SMT get taken out. So, and I also want to see a change in the state here. So I'm waiting for extra confirmation. I don't want, price to decide that it wants to take more buy side, that it wants to, take out that 15-minute gap we have here, right below that new week's opening gap. I don't want to see price, decide that it wants more internal buy side liquidity before taking out external sell side. So I want more confirmation. And so now all I'm doing is I'm waiting for price to kind of break this structure, changing the state. So we have a confident tell that price wants to officially head lower because of this bullish SMT. But that's not what it does, right? It completely runs through that bearish unicorn model, which invalidates a pretty powerful model. We have a pretty clean bearish unicorn model here, right? And it just invalidates that. It runs through our fair value gaps. We have we have a 1 minute inverse fair value gap. And because of that, we also create a bullish unicorn model. We have a low, high, lower low, higher high. In addition to that, we have a bullish SMT. Now, when we were looking for that bearish unicorn model, we didn't have an SMT, right? But for this, we invalidate our bearish unicorn model. We have a bullish SMT. We have a 1 minute fair value gap. And so that's a pretty obvious sign that, okay, we're not done looking for buy side. We're not done. Even though we took London highs, we took Asia highs, the market still wants more. That's what it's telling us. So because of that, I'm looking for longs now. Okay, so I'm looking for longs, and we have a pretty clean entry here. Maybe I should have put my stop loss a little bit lower, but 25 is what I usually like to look for. So first fair value gap that kind of breaks the structure of, kind of gives us that change in the state. I enter off of that. We a beautiful entry here. And then after that, my first take profit, I'm pretty sure was it at, I think it was at 20,124 was my first take. No. What was my first take profit here? Let's see. First take profit was at 20,116. 20,116. So wherever that is, that was my first take profit here. After I take that partial profit, I move my stops to break even, and then I start trailing it once it starts moving up a little higher. And that's when I mess up. I put my trailing stop loss a little bit too high, too aggressively, and price kind of stomps me out. But it doesn't look like we might start a reversal here soon after taking out Asia highs. We might not see us deliver up all the way up here, which is fine, right? Like, even if we start delivering lower, that's kind of what I want to see for the rest of the week, for us to deliver lower and take out more of the internal sell side here. So yeah. But yeah, that was kind of the trades I took today. Hopefully it made sense. The big thing here today was always adapt and see what price is telling you. And then draws on liquidity is huge, right? You can have a model. I've learned this the past week or two, and it's helped me a lot get out of that break-even stage. Right now I'm at 51,655. So, a little bit more than halfway there in the combine. But what helped me the most, honestly, was knowing where price wants to draw to. And I know that's cliche, and I know it's simple to do, but all you have to do is mark out the Asia highs, London lows, London highs, Asia lows, previous day highs, previous day low, previous week high, previous week lows. And that's going to help you a lot as to where price wants to go, because price can give you a textbook bullish unicorn model after it takes out like a Asia high, right? Or like a previous day high. After it takes out like an external buy side liquidity, any sort of external buy side liquidity, and then right after that I can give you a textbook bullish unicorn model, because that's what's happened to me before. But why would you take another long if it just took out a high time frame buy side liquidity? If it took out an external buy side liquidity, obviously price is going to look for internal sell side liquidity now, right? So even if it gives you a textbook unicorn model or textbook model, whatever you kind of trade, always make sure that the draw on liquidity is on your side, because if it's not, price doesn't give a shit about your model. It's going to run right through it and go towards the draw, which is on the opposite side. Okay, so that's the big thing, is adapting to where price wants to go, is knowing what kind of liquidity price just took and realizing what it wants to take right after. And your job is to kind of connect your model and what price is telling you, and just to kind of confirm that your draw on liquidity is right, combining your model together. Hopefully, yeah, hopefully that made sense. But yeah, thank you guys for watching. Winning day today. Hopefully we can get some more this week. Hopefully price is not so shitty the rest of the week. I thank you guys for watching, and have a great rest of y'all's day, and God bless.